But let's talk about a stock that's under pressure on the back of its earnings, and that's Refex Industries. A 3% cut coming in on the stock, wherein you've seen revenue that's down 1%. On the flip side, net profit is up a healthy 55%, but the street is not liking that number too much because you have Refex that's lower by about 3.1%. Let's understand what's the road ahead for the company. We have Mr. Dinesh Agarwal, the whole-time director and CFO at Refex Industries, joining us. Mr. Agarwal, hi, good afternoon, and thanks for your time. Let's start by talking about your order book first. Of the 1200 odd crore rupee order book that you have, what portion is expected to convert to revenue in this year and the next financial year?
So order book, which we told during our earning calls also, it is around 1200 crore, and complete 1200 crore, close to 1000 crore will convert into revenue in this financial year itself.
Yeah, so also if you can give us an understanding of how do you plan to reach the target of 105,000 to 110,000 metric tons of daily ash handling capacity over the next 3 years? What kind of incremental investment or fleet expansion will you require?
There will not be much because we work on a hybrid model where we keep our fleet size, own fleet size is between 10 to 15%, and we do a attach, which we hire from market around 85% to 90%. There won't be much capex. Capex will be around, anywhere be around rupees 30 to 50 crore. 30 to 50 crore will be the capex amount.
Okay, so that's the capex amount that you're eyeing. But regarding the wind energy business, what portion of the 1,225 crore in terms of orders do you expect to execute in FY26 versus what will be the spillover in FY27?
Close to 50-55% will get executed. That is the commitment also to the customer in the current financial year. And the following, first half year, the balance will get executed.
Sir, if you can also give us an understanding of how do margins in the turbine business compare with those in the core ash and coal handling operations?
Wind turbine business is a pure product business where we are currently doing the assembly and selling of it. We are competitive in terms of pricing to our competitor. We expect a good margin. Where wind always will have a high value business. A margin will be like any other competitor. Will have a good margin there.
Okay, and Mr. Agarwal, is the 6 to 7 month timeline for the demerger and listing of Refex Mobility Ltd still on track, and which regulatory milestones have been completed so far?
No, as of now, the first milestone, we expect the approval in 1 week time. That is the BSE and NSE, where all the queries from the exchange, both the exchange has been addressed. That is the first milestone before we file the application with NCLT. We are ready with our all applications, documentations for filing with the NCLT. Once we receive from the BSE and NSE, we'll file within 2 to 3 days to the NCLT. And NCLT process normally, what we understand, takes anywhere between 4 to 7 months time. That is the timeline we expect.
Sir, after the demerger, do you foresee Refex Mobility pursuing its own fundraising or bringing in a strategic investor to accelerate growth?
That is the idea behind, because there is two set of different investor. Coal and ash handling business, where the Refex industry is currently into. The kind of investor who will look into this business and the kind of investor who will look into the Refex Mobility Ltd will be two different kind of investors and two different class of investors. And we have to go for a fundraising there, and there will be a different set of investor working along with us.
Okay, Mr. Agarwal, appreciate you joining us, and thanks for sharing that outlook going ahead as well. So that was the management of Refex Industries. That stock under slight pressure, a 3% cut on that stock today. But on that note, we'll slip into a very short break.